Ladies and gentlemen, good day and welcome to the SG Finserve Q3 FY26 conference call hosted by Equirus Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that the conference is being recorded. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinion, and expectations of the company as on date of this call. These statements are not the guarantee of future performance and involve risk and uncertainty that are difficult to predict. I now hand the conference over to Mr. Sripal Doshi from Equirus Securities. Thank you, and over to you, Mr. Sripal.
Thank you, Rudra. Good evening, everyone. We welcome you all to the earnings conference call of SG Finserve to discuss the Q3 FY26 performance of the company. Today, we have the management of the company represented by Mr. Vinay Gupta, CEO, Mr. Sanjay Rajput, CFO, and Mr. Anubhav Gupta, Group Chief Strategy Officer. Without taking much time, I would now like to hand over the call to the management for their opening remarks, post which we can open the forum for question and answer. Over to you, sir.
Hi, this is Vinay Gupta. Jai Hind, everyone. I would like to first thank my predecessor, Saurabh Dhawan, for laying a strong foundation of SG Finserve and under the guidance of our sponsors. We are fully committed to taking this franchise to new heights while creating sustainable value for our stakeholders. We are also pleased to share your NBFC has delivered an excellent financial and operational performance during the Q3 and the 9 months ending December 25. We have achieved all-time high loan book of 3,210 crore as on 31st December, registering a quarter-on-quarter growth of 12%. At the same time, our profitability perspective of profit after tax for Q3 stand at 32 crore, reflecting a quarter-on-quarter growth of 15%. For the 9 months ended December, our PAT was 85 crore, of the year-on-year growth of 49%. Supply chain financing, as everyone know, continues to remain our core strength and focus, which contributes to around 70% of our AUM as of today. Recently, RBI has granted us a license to commence our factoring business, which further strengthen our supply chain financing offering. Operationally, we remain a very highly disciplined NBFC with cost-to-income ratio of less than 15%, nil NPAs. We have delivered return on asset of 4.4% and return on equity of 10.5% on annualized basis for the first 9 months. From a balance sheet perspective, we are well capitalized with equity of approximately 1,100 crore and a conservative leverage of nearing 2x, which provides us an ample headroom to support our growth over the next 3 to 4 years. From a forward-looking guidance perspective, our growth is targeted very clear and focused manner. On the loan book size for the next 4 years, as a CAGR basis, we look to grow at 20% to take the book to 7,500 crore by March 2030. However, on the profitability perspective, the CAGR would be around 30% during the same period, so that we achieve 500 crore kind of PBT in FY30, which will translate to return on asset of around 5% and return on equity of around 15%. Our strategy is centered around deepening and widening, where we'll strengthen our relationship with our existing anchors and customers, acquire new customers outside in the market and from the existing anchor base, expand our product offering, forge some new strategic partnerships, and explore new financial services. Subject to regulatory approvals, our today board has approved the expansion plan to set up new 4 subsidiaries, which will further augment our fee-based revenue. We are looking at a completely the drawing board stage today, but the board has approved to explore these areas of ARC, alternate investment fund, insurance broking business, and the fintech business. At the closing, I would like to sincerely thank all our stakeholders for their continued trust and support. Together, we will continue to build a strong, scalable, and sustainable SG Finserve. Thank you, everyone. Over to you.
Thank you very much. We'll now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Sukrit D. Patil from Eyesight Fintrade Private Limited. Please go ahead.
Good evening to the team. I have two questions. My first question is to Mr. Gupta. As SG Finserve transitions under new leadership, how do you see the lending portfolio evolving over the next 2 to 3 quarters, particularly in balancing retail, SME, and supply chain finance? And what role will digital underwriting, risk analytics, and partnerships play in scaling customer acquisition while maintaining asset quality? That's my first question. I'll ask my second question after this. Thank you.
So, thank you, Supri, for the question. On the retail side, as of now, we are not doing any retail. We are only doing supply chain, which is anchored to dealer. Only thing we are trying to do now, as part of the investor presentation, I'm sure you would have seen, we are trying to deepen our engagement at a tier 2 level, which is more strategic in nature, granular in nature, and high yielding and stickiness. So retailing, as of now, we are not doing. So supply chain will continue to be currently 70% of our AUM, as I said in my opening remarks, is supply chain, and we would continue to maintain that 70% between the anchor-led or open account financing or a supply chain factoring-based business. As of today, we are not looking to enter into retail.
Okay. And my second question is to Mr. Sanjay. With strong capital adequacy and a growing NBFC footprint, how are you planning to sustain margins while managing funding costs and credit risk? Looking ahead, what is your framework for balancing operating levers, disciplined capital allocation, and compliance to drive ROE in the long-term process? Thank you.
So I'll only take that question, Supri, if you allow. I know Vinay here. So currently our leverage is 2x, okay, with an 1100 crore equity. Another equity of 388 crore is already due, which is coming to once. With few accruals for the Q4 put together, I think we are looking to have an equity base of somewhere between 1450 crore to 1500 crore as we begin the new financial year. And the AUM growth, as I said, we are going to look only 20% CAGR. So as of today, the 2x is the only leverage we have planned. However, as part of our board approvals, we already have 5,000 crore borrowing plans already approved. There are banks, we are already dealing with 18 banks and 2 mutual funds in the market in terms of our borrowing. So I think the room is ample for us available in terms of the existing equity base to grow our balance sheet. From a 2x to 3x, if we were to leverage ourselves, then yes, resultant return on equity will be higher. However, we would like to play a little more conservative, considering it's still initial stage of our operations.
Thank you, and I wish the entire team best of luck for the next quarter.
Thank you so much, Sutri.
Thank you. Our next question is from the line of Kushal Jajodia from Kushal Jajodia and Associates. Please go ahead.
Hi, management. Hi, team. So my question is for Anubhav Gupta ji. Anubhav, wanted to ask, the subsidiaries will be funded by the share warrants pending due, right?
That's right.
Right. So when can we expect the money to come to the company, by March or April?
So April is the deadline, right? We might do it earlier also, although there is no compulsion on the shareholders, right, to do it earlier. But yes, the idea is if it comes early, so then 31st March balance sheet will appear much stronger.
Achha, Anubhav, I wanted the guidance for FY27 and 28. So the thing is, FY26-27, you have clear-cut given the guidance of 6,000 crore AUM. And in the investor presentation which we got it today, March 30, we are predicting an AUM of 7,500 crores. So why this 3 years we are downgrading our run rate basically? If we are adding something like in the previous Concalls you have given ki every year we are predicting to add like 1,000 crores AUM. So post 2026-27, from 6,000, why we are lowering it to 500 crores per year or something like that?
No, so what had happened was that you would remember that there was this withdrawal of license from the RBI, right? Where we could not run the business for good 6-7 months on the full scale, right? Because we had to get the Type 2 license, which put the company behind by 6 to 8 months. Okay, so that's the reason that why this guidance looks lower compared to like what we had given when we had started the company. But see, I mean, this year we're going to close our AUM at 3,500 crores, and then every year we're going to increase it by 1,000 crores, not 500 crores. So March 27.
Because our guidance for 25-26 is 6,000 crores AUM, right?
26-27 was for 6,000.
26-27. Sorry.
Yeah. So now.
And in the investor presentation of March 30 is given 7,500. So on an average from FY27 onwards, basically, we are predicting on an average only 500 crore AUM will be added.
1,000, no, every year 1,000 is getting added.
And we're assuming that March 27 continue to be 6,000. That's why we are calculating 500 crores, but that's not the case. March 27 also we have gone down.
Right. So we are talking about 20% CAGR. Okay. From March 26 to March 30, we are talking about 21% CAGR. Right. So see, I mean, please understand that SG Finserve as a company, it had two key developments in last 1 year. One was, I mean, the business got halted because of the renewal of license, right? What we had to do. Second, obviously, the team which started the company, it went out, and then the new team coming in. So now it's just that we are being a bit conservative, right, while giving guidance. And once we achieve these numbers, I mean, there is no harm in upgrading the guidance, right? Now, I'm sure you'll be following APL Apollo Steel Tube stock as well, right? In Q1, when things were not too great, right, we cut our guidance from 20% volume growth to 10 to 15% volume growth. Now, first 9 months we did well, and yesterday only on the earnings call, we upgraded the growth guidance to 20%. So that's our group philosophy, that let's not be too aggressive on guidance, given that two key developments just got over. New management is taking charge, right? Although the base team is same, but still we want to give some breather to the new management so that in aggression we shouldn't be doing any error or any mistake. So 6 months, I mean, who knows that we may close March 26 more than 3,500 crores, or maybe we achieve 4,500 crores within 2026 calendar year. So if that happens, then I mean, it just takes one earnings call, one analyst call to say, hey, I mean, we are doing good, and now we are upgrading our guidance.
Just last one more question. Can you elaborate more about the AIF you are trying to open as a subsidiary? What will the AIF do?
So this is a very broad-based idea, right? I mean, no development as of now. Okay, it's just the broader vision what we are telling the investors, right? No action is being taken as of now, and we are still like few quarters away. Right now, the focus is to achieve 4,500 crore loan book in next 12 months. That's the idea.
Okay. Thank you so much, Anubhav.
Thank you. Participants who wish to ask a question may press star and 1 on their touchtone telephone. Our next question is from the line of Shashank Jha from SB Capital. Please go ahead.
Yeah, my question was already questioned by previous participants. Thank you.
Thank you. Our next question is from the line of Shubhma, an individual investor. Please go ahead.
Hey, hello sir. Are you able to hear me? Hello?
Yeah. Hello.
Yeah, please go ahead.
Yeah, are you able to hear me? Yeah, so this is Shubham. So my question is regarding your guidance change, sir, right? Like, I've been following this company since 1.5 years. Like, we have not been clear in our guidance, right? And the thing that I wanted to check with your team is like, of course, like you are giving some guidance to the investor community, but such change in your aspirations, it might also create some dissonance within your team, within your management team, right? So what are you targeting as a management team? Like what is that internal number that you are chasing? If you can just share some highlight on that. Also, like 1,000 crore additionally AUM for the next 4 years, right? This seems very linear. When you want to grow at 20% CAGR, this number should also be not 1,000 crore. At the rate should start from 600 crore and then go to 1,000, 1,500 crores, right? Because your size of the organization will also increase. So have we actually calibrated this guidance? Is there some science behind this guidance, or we have just given, or we have just put some number there? Like 1,000 crore per year AUM, that doesn't actually make sense, to be very honest, right? Like size of organization will change, everything will change. And why this 1,000 crore linear number year after year?
So let's split this question into two parts. One is that what went wrong in revising the guidances, continuously in last 2.5 years, and now the guidance which we have given, why we think this is fair to give as of date, and there will always be probability that it could be further upgraded. So I'll take the first part and I'll let Vinay take the second part. So see, I mean, like I said, the company went through two key situations, right? I mean, as a group, we were new to this business. This RBI thing which had come in, right? It came like overnight, right? And we had to run down the business, right? From 2,000 crore loan book, we had to bring it down to 1,200 crore within like weeks time, and we had to give money back to the banks, right? And then promoter had to infuse funds, which he did. Then again we had to reinitiate the process with the banks to get the limits, etc. Right? So this all took almost 7-8 months, right, of the business operations. And when the company got on track in terms of RBI licensing, then we had the exit of key management personnel, right? So I think, I mean, these are the two main reasons that why we had to keep on kind of revising down our guideline, etc. But now it's fairly stable, right? I mean, whether the RBI license and the new management which has taken charge. So the guidance, again, I mean, it's just like 2 months Vinay team joined in, right? We just don't, as a promoter group, we don't want to pressurize the new team so much, right? That it could be, I mean, 1,000 crore addition every year looks linear. Yes, it is, right? But like I said, this is not something which is writing on a wall, right? Which we are going to stick to it. Okay. First idea is that I mean, see, growth from 3,500 to 4,500 is 33%. Okay, if we achieve 33% loan book growth, right, by March 27, or if we are able to achieve it, say, by December 26, it gives us confidence. Hey, next year let's aim for 6,000 or 6,000 plus, and then maybe 8,000 and maybe 10,000, not only 7,500 by FY30. This was our original plan, to reach 10,000 crore by 2030 when we had started the company in 2022. So 10,000 crore loan book by 2030 is possible, right? It's just that we want to go slow, okay? And the idea to be so transparent in giving these numbers to you so that the expectation gets set on day one, and the new team starts working on to overachieve these numbers, right? And again, see, I mean, whatever growth numbers we have given, but I mean, what we want is that the company should stand on zero NPA. Okay, we don't want any NPA, and that's the beauty of like running an NBFC that we have learned from 2020 to 2026 now, more than 3 years, that 50,000-60,000 crores of gross disbursement, what we have done, we are sitting on zero NPAs. It's very easy to say that, hey, I can grow at 2,000, 3,000 crore loan book every month. But what if NPAs come from there, right? For us, what matters to us more than growth is no accident, okay, no NPA. So if we grow loan book faster than what we have guided for without any NPA, we will go aggressive next year, right? But yes.
Then what is the sense of guidance, right? Either we should not then give long-term guidance if we are ourselves saying that we will change it.
It's a fair point. It's a fair point. It's a fair point that we could have given guidance for say 2 years. I mean, we will. We can.
Because it will set. Yeah, it will set the maybe bar too low for your team also, right? Like that is also one more perspective. Like
also this is
expectations. Yeah, like you won't get any questions here then again, right? Like if investors, either the high growth investors will leave or they will say that this is the expectation, so they won't question you on that, right? And nobody will be chasing you for that good metric also. Growth is also a good metric to chase. Right? So that was my point, but I understand your point, sir. But better would have been like you give some short-term guidance, maybe next 1 or 2 years, and or either not give guidance and have good decent amount of targets for your team as you see fit. Also, sir, one follow-up on this, like does this guidance...
Fair enough. Just to add to your point, So the guidance is given for the investors in this presentation. This is not the internal target, so what we have given to the team. So just to clarify on that.
Okay.
But your point is well taken.
Okay.
Thanks. Your next question, please.
Okay. Sir, my question is, like, does that factoring business, right? That is a big business that you got the license for. The industry size is big for that, and we are also in very nascent stages of that industry, right? So, does this guidance also include that factoring business? Have we thought about that, or are we doing some internal planning around that factoring business? Like, what can be the profit for pool AUM and all those things around that?
Sure, hi, Vinay here. So the factoring business is not going to be a very significant business. We wanted to expand our product offering because we are more focused towards business to dealer, business to distribution business. We as an NBFC are not present in business to business. The B2B sales or the trade which is happening between the buyer and seller, that is a segment we want to target. But factoring business, as I'm sure you would know, it's not very from a cost discipline and a credit discipline perspective, it needs a lot of recalibration. So we are not looking to grow very aggressively. So on the factoring, we would like to start with with baby steps and then build and learn and build.
Yes. Thank you for your answers and patience, sir. Thank you.
Thank you, Shiva.
Thank you. Our next question is from the line of Sangeeta Purushottam from Cogito Advisors. Please go ahead.
Yeah, hi. Am I audible?
Yes, Sangeeta, you are.
Okay. So actually my questions also relate to the guidance as well as to slides 14 and 15. Now, at one level, would I be correct in saying that the primary reason that you have lowered the guidance is because of the change in the management team? Is that the main reason that you're allowing the new team time to settle in, and that's really the key reason? Otherwise, what has changed between last quarter and this quarter?
So, Anubhav here.
Anubhav.
So you can say that, yes, right, because the growth plan which the earlier team was running, right, definitely we thought that let new team get settled in, right, put accelerator on, and then we can definitely kind of ramp up things, and that's been the strength of our group, right? And that's how we scaled up SG Finserve from October 22 when we started the business, right? So it's just that like two situations which came in last 12-18 months. We just thought maybe 4-5 months let things get back on track, and then like things were already back on track. It's just that new team is able to press the pedal and accelerate maybe like not immediately after 6 months. That's all.
Okay. So see, the first point that you mentioned, about the license which was revoked and which came back, that's history, right? Whatever guidance you had given, the 4,000...
A year back, Sangeeta, there was only a year back.
No, I understand, Anubhav, but if you look at your last two presentations, which have happened after that issue got sorted out, you were still giving a guidance of 4,000 crores AUM and 6,000 crores AUM by 2027. So that was post that issue getting sorted out. Now, that's why I was saying that between the last quarter and now, the only major change is that there's been a change in the management team.
Yes.
Yes. Right? Yes. So that's the incremental change, and so is it really because of that you have lowered the guidance, or are you also facing some challenges in growth? And the reason I'm asking that is that somewhere...
So let me clarify, Sangeeta, it's only because of the management, no other reason. I mean, like I said, we can still close FY26 and March 26 at 4,000 crores.
Okay, so it's mainly to allow the new management team to settle in.
Yes.
Okay, then in that case, Anubhav, I do agree with what the previous participants said. If that's the reason, I think that should have been just very clearly communicated, and I don't see, again, the logic like him of giving an FY30 guidance of 7,500 crores. I mean, you don't know what's going to happen in the next 12 months, so why are you giving the guidance for, FY30? Okay. So, that is, The second thing is that, so are you somewhat overcapitalized at this point in time? And is that the reason that you're looking at some of these new strategic initiatives? Because if I look at, slide 14 and 15, I'm not able to see a very clear logic of getting into some of these things, or at least it's not evident to me. So it would be good if you could explain, not a factoring, I see the logic, but many of the other points which are mentioned seem a little, to me, all over the place. And why would you, at this stage, want to put in 300 crores into asset management company, alternative funds, etc., when the clear focus really should be to grow the core business as much as possible and stabilize that with a new management team? So I'm not very clear about these initiatives. So it'd be good if you could spend some time explaining that.
Sure, Sangeeta. So coming to the first point of overcapitalization, okay. See, I mean, and just to tell you, like, the kind of uncertainty, the capital markets have brought, right? Although it's like warrant conversion has to take place, right, in March at 450 rupees. It's family, right? We're going to put in external investors. We have their commitment also, right? But 3 months back, the stock price was at like $350, right? So one would wonder like whether the external money would come at 450 or not. But we know that it would, and we got the commitments. Okay, so so after that money coming in, like, and 99.9% will happen by March, within March fiscal year, okay, so that we close the balance sheet with much more stronger financials. So we will get 1,500 crore of equity. Now, from day one, you guys have been tracking us. We have been saying that we will not leverage our balance sheet beyond 2.5, 3 times. Okay, we don't want to be an NBFC which is leveraging its balance sheet 5 times, 7 times, 8 times, and then we go aggressive in picking bad loans, risky loans from the market, and then they eventually come back to us with NPAs, right? We don't want to get into that trap. We are happy. We are happy with the linear growth of 1,000 crore loan book addition, but with zero NPA. That is the most prime thing the old team had, the new team has, right? Right at the time when we conceptualized the idea of launching an NBFC. Okay.
Right.
So overcapitalization at 2-3 times, we are pretty sorted. This 300 crore, investment into multiple new business lines, it is just a broad-based vision, Sangeeta, right? This is what we may also do, right? For next 2 years, the focus is only to build supply chain book and to overachieve or surpass the guidance what we gave to our investors. Nothing is going to happen whatever you saw on slide 14, 15. It is just a broader vision. The SG Finserve management board think that by 2030 can we have multiple verticals, okay? But nothing is going to move for next 2 years till we overachieve the targets what we have given to you.
Okay. So in that case, Anubhav, again, I think it's sort of confusing the picture by having these, if the plans are not very clear at the moment. And, one of your strengths has been that whatever you guys do, you tend to be clear about operating in your areas of strength, right? So your supply chain business is also built upon the strength of the core Apollo, APL Apollo tubes and what the group has, right? So that form the core of the business, and that's what gives you the understanding and the depth to go into this. So, when you're looking at adjacent businesses also, I think it would be important to ensure that whatever you're doing is something that you have a right to win. Otherwise you could run the risk of becoming another generic kind of an NBFC with, no special strengths if you just diversify too much, because that's what it kind of, which is a little concerning. So what is your strength, for example, to look at the ARC? In AIF, what are you looking at? Why insurance broking? So some of these questions pop up when you see this fairly disparate kind of, items given on slides 14 and 15.
Point well noted, Sangeeta. I think it is just so just to come to your earlier point that, the company was started or conceptualized to become India's leading supply chain financer. That remains. Okay, and there is no change in that. And 2030, whatever loan book growth is there, bulk of that will be coming from supply chain. Given the group itself, you are following APL Apollo and other SG Mart group companies also. So the kind of business ramp up which is happening there, plus the anchors what we added, the business what our anchors are increasing year on year, right? So there is ample opportunity to take supply chain funding loan book to 10,000 crores by 2030. Now that's the universe. Whether we achieve it or not, that we'll see. Okay, but that is achievable, doable. On sidelines, right? When company is going to generate 500-600 crores worth of PAT every month, every year, right? So then you tend to see that what all new verticals can be built in, right? If they make sense or not, right? There'll be a lot of logical discussions, meetings, debates will take place between the board, the management, the promoters, right? Only then we'll take any step. I think it is just out of excitement. The team and everyone has put these things, but nothing is going to happen in next 2-3 years. You can mark our words.
Okay. All right. Yeah. Okay. Thanks.
Thank you. Our next question is from the line of Puneet Mittal from Abiso Investment Advisors LLP. Please go ahead.
Hi, thank you for the opportunity. I think, unfortunately, I will have to harp on that point because this last two con calls, and especially this one, is giving a lot of really mixed signals to the investor. On one side, you are saying that you have changed your guidance because you want to give management time to settle. On the other side, you are venturing into new business. On one side, you're saying that you're not doing anything for 2-3 years, but on the other side, you are allocating about 30% of FY26 book, which is about 400 crore to new businesses. I think you mentioned historically that you want to be leader in supply chain. It's a huge market, and we have not even scratched the surface. Then at this stage, why even think about anything else? And if you do think about something else and you do have concrete plans, maybe come back to the investor community with the concrete plans. So this unfortunately, sorry to say that, but this presentation and this con call is really confusing to investor community, I would say.
So let me clarify, Puneet. Okay. So see, the team which came in, right, the existing management team, the new management team, that is for the supply chain business, right? Its mandate is to run the supply chain book. Now, in next 2-3 years, if at all we go into new verticals, so new teams will be brought in. Not the existing team will have to run that business. Okay. Like I said, it just came out of excitement on the slide that, okay, we can do this. But for next 2-3 years, there is no plan to invest even $1 or to hire even one person who would try to start all of this, what we put in. So I would like to reassure to each one of you that SG Finserve's mandate is to become really big in supply chain funding. Okay, our own group requirement, which right now is 800-900 crore, will become 3,000 to 4,000 crore by 2030. Right, so we need SG Finserve to be very, very strong. Secondly, the anchors who got attached to us, who are working with us closely, 15-20 of them, right, they have an appetite to take loan book to another 3,000-4,000 crore rupees. And then there will be new anchors which can be brought in for another 3,000-4,000 crore of loan book. So we have clear visibility that how this 10,000 crore of loan book will be created. Now, if it happens by 2030, 35 or 28, that's difficult to say, right? But the ultimate goal is to reach at 10,000 crore loan book in supply chain funding. Now that this point has been raised again, I'm on behalf of SG Finserve, we are reassuring that not even $1 of investment or hiring will be done in these initiatives, what you saw on investor slides.
Great. Thank you for assurance. And as you know better than we do that the market rewards monoline leaders in NBFC a lot more than multi-line. But thanks for the assurance. My second question is more on the existing business. The 30% of the non-supply business, can you give a little bit more color on that and how you plan to ramp up that business, please?
So, Puneet, 30% of our business is, more on the business loans, cross-sell, which we are doing with our existing customer of ours. Because when we deal with the anchors and the dealers and the distributors, their requirements in their ecosystem may not be the direct borrower, but within their ecosystem, the requirement comes. So when we interact with them, the requirement comes in terms of financing their loan against properties, maybe business loans, maybe working capital beyond supply chain. So that is that piece.
So it's within the same ecosystem, right, wherein the customer may not need, apart from channel financing, he may require some business loan or LAP. So that's what we cater to.
How would you assure zero NPA in that segment in that case?
It's a highly secured business, Puneet. We either take the hard collateral or the shares. It's a very highly secured business. In a supply chain business, natural security is the linkage between the buyer and seller. So the high pedigree anchor will be there either on the sale side or the purchase side. Here, this business, the absence of linkage is there, but ecosystem is there and collateral is there. So it's a highly secure business.
Okay. And my last question, if you can give us, what was the average loan book for Q3?
2,926 crores.
Got it. Thank you so much for all your answers, and all the very best. Thank you.
Thank you, Puneet.
Thank you. Our next question is from the line of Daksh Jain from Sagun Capital. Please go ahead.
Sir, what's our current MOU standing with the anchors, and have we added any big names that this recently?
So that your voice is not very clear. It's echoing.
Sir, what's our current MOU standing with the anchors?
MOU.
Sir,
You want to know the number?
Be a little more clear with the voice. Mr. Daksh Jain, please.
Am I audible now?
Oh, yes.
Hello. Sir, I'm asking what's the MOU, the memorandum of understanding that we have with the anchors, like the business they promise us when their brands get onboarded on the platform.
The aggregate is more than 7,000 crore on a overall aggregate basis.
Okay, and sir, can you clarify like what's the timeline that the MOU gets converted into actual AUM?
It's a long gestation, but it also depends upon the nature of the program. So it varies, but the entire MOU may not get converted. It will always be lower than that because it's a three-stage. What is the MOU size, then the aggregate dealer level or distributor level limit sanction, and then the overall utilization. So it's a three-layer process. So the MOU never gets consumed 100%. So that's something I'm sure you would understand. However, any MOU, when once new MOU sign off, I think the leads start getting kicked in the first week, first fortnight itself, and the build-up start happening. The build-up gestation generally take around a year to be at a meaningful stage of the MOU being stabilized. Then natural growth within the MOU in terms of new leads or the enhancement from the existing dealers or the enhancement of the MOU, so that's the natural process. But the stabilization of an MOU, I can say broadly, it takes around a year also.
Okay, thanks. And sir, just one request for future presentation, can you please include the cost of borrowing and the yield that we are deriving and the incremental, all those metrics?
I will not be able to share that because that will give us some idea about, because we are double A rated NBFC. Our negotiation with our set of lenders is different, and I would not like to give that information to my peers.
Okay, sir. Thank you.
Thank you. Our next question is from the line of Kushal Jajodia from Kushal Jajodia and Associates. Please go ahead.
Anubhav, I spoke to you. I have one more question. So, this ESOP, when can we expect the vesting date? Is it near at the time of the share warrants only, or it will be delayed?
No, Kushal, Vinay here. You reading it through from the outcome of our board meeting, right? So there's a new policy which has been approved by board today. The new ESOP.
Absolutely got it, but can we expect the ESOP to be devised within a year?
No, I
What
don't
is the
think so.
board meeting? When are we deciding on that?
So first we will go for the shareholder approval, Kushal. Then we will go to the remuneration committee. Then we will decide. It's far away from here now.
One more question I had. I had actually checked the financials of FY25. Okay. So there was a fixed deposit of around 30 crores and there were mutual funds at that time. So what is the current status of the liquid cash as on date, basically, while we are speaking to you? The FDs are, how much is the liquid assets to the tune of lying in the FD and the mutual fund?
38 CR. 30 crore is
both of them, right, sir?
38 crore is the total liquidity we have currently.
I guess fixed deposits are lying as a margin, right?
Yes. So the fixed deposits are lying in the bank. However, maybe on temporary basis we may need to use some money against that FD, but that's not the idea. It's not the margin.
And mutual funds are not there as of now, right?
No, it is not there.
Great. Okay, thank you.
Thank you.
Thank you. Our next question is from the line of Akhilesh Kumar, an individual investor. Please go ahead.
No, I would like to know that since in the new 4 verticals, what we have announced for 400 crores, and the approximate new equity what we are expecting by March is 400 odd. So incrementally, we are not going to have any addition of equity for lending purposes.
Akhilesh Vinay here, as Anubhav alluded earlier also to the earlier participants. Today our board has approved the drawing board stage ideation about the new businesses, which is at a completely drawing board stage as of now. So there is no business plan, there is no investment, there is a long gestation, regulatory approval, understanding the business, and then narrowing down what we need to do. So there is no plan. This is a board approved ideation, which is going to be a lot of brainstorming and business planning will happen. So it's long away. Very difficult to say anything. As Anubhav said, we have not made up our mind to put even $1 into any of the subsidiary today.
Okay, but this is very confusing. Like, say, we are here 10, 20 people, shareholders on the call. What about your other, say, 8, 9,000 shareholders? You should communicate properly. Would you mind it resending a new release where you will say that these are at idea level, not on, we are not going to implement or not going to put money into them for next 2-3 years, what you are saying here?
It's a fair point. Let us talk to our compliance team, how we can course correct it. We'll work on it.
Yeah, because not me, everyone else is also interpreting the same thing, right? The 400 crores, 30% equity is going there and you are putting new things there. And just give me one idea, how is the ARC business in India is doing? Are they aligned with your zero NPA approach running the business?
So definitely, zero NPA, is for supply chain funding business, and ARC is a much more risky business. So like we said, and again we are reiterating, reassuring that it is just the exploration of like what SG Finserve can do in future. Okay, whatever doesn't fit our box, and we will not go with it. It's very clear.
Yeah, it's very clear for you and management, but for the shareholders, it's never a visibility. Either RBI license is coming or ESOP cost is coming or venturing in ideas, but you never warn us like where you want to go take the next step, right? Suddenly guidance has been changed. And before that, you were having full confidence. So this kind of communication is not going to help. You need to improve on that so that we are better prepared for that.
Fair enough. We'll be more prudent and will improve ourselves. Promise from our side.
Okay, that's it from my side, and I would hope that you give a better communication to the exchanges so that everybody else is aware of what you are thinking.
Definitely, yes. Thanks so much.
Okay. Thank you.
Thank you. As there are no further questions from the participants, I now hand the conference over to the management for their closing comments.
Thanks everyone for joining this call. I look forward to see you again during Q4 earnings call with all the points which were raised today. We will take care of those points and address them accordingly.
Thank you.
Thanks.
On behalf of Equirus Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.